So I've actually written countless business plans for clients out there. And throughout my career as a business consultant, writing these documents, I've discovered that a lot of people often have issues with financial projections. I think that is one of the dreaded part of the business plan that they do not want to complete or anything like that. Hence, it's true that it needs somebody who understands the accounting aspects, right? Somebody that can actually do a balance sheet and actually understand the elements that are there, like for example, what falls under the current assets, the current liabilities, and things like that. But apart from that, right, I just want to talk basically about financial projections. What are they, and actually, why would your business need them? Now, when we're talking about financial projections, right, we're basically talking about the financial assumptions that your business might actually incur maybe in the next 5 or 6 or 10 years, right? So you're actually assuming the expenses, like the expenses that your business will incur, for example, the rent, how much rent you will pay maybe in the next 5 years, right? Things like that. So you're projecting the expenses, the revenue, and also the cash flows, like how you're going to use your money. Now, financial projections are very important in the aspect that you're able to understand like your business financial health, right? And whether you're going to make money in the future or possibly make losses. And based on the level, right, of the business, whether maybe it's a new startup or it's a business that has been operating for maybe a year or two, you can actually prepare them differently. For example, if your business has been operating, you can actually use the historical financial history to predict the future. But if you don't have that information, you can actually use maybe another business as an example, and also maybe do some research, collect maybe details, and possibly about rent, electricity rates, and things like that. Understand your total business cost structure, and actually understand like your market, your target market, and basically the price that they're going to pay. And if you have that kind of information, you can actually project like how much your business will make if they are to sell these things, and how much it will cost to run your business and things like that. So that is the nice thing about financial projections. You're able to determine where your business is going to the future, what it will need, and also possibly the potential risk that might come with running a business. So what are some of the examples of financial statements? The first one is the income statement or the profit and loss. So this statement enables you to project the revenue, which is the money that you're going to make from selling your products and services, and also the expenses, right? The expenditure on how much you will spend to run a business. Maybe that's rents, or maybe it's electricity bills, other fees, and things like that. And like how much net profit are you going to have? So this is actually what that statement kind of project. And the next statement will be the cash flow. Now, the cash flow basically helps you to project on how you're going to spend your money, right? How much you're going to receive on the receipt part, and where you're going to receive that money from. Whether it's from your main business, like if you're selling maybe products, or if you maybe are doing some sort of affiliate program or some marketing somewhere, or another source of income. And then we have the payment section. This is actually where you'll be spending the money. How much you're going to pay for rent, how much you're going to pay for electricity, and things like that. And after all that, what will be the remaining balance that will be left to be reinvested into the business? And then lastly, we've got the balance sheet. Now, the balance sheet basically explains what you have as a company, which will be the assets, right? Like the fixed assets, which are things like the buildings, like things that you cannot turn into cash, and also the current assets, which are things like cash and stock, and things basically that you can actually that have a high level of liquidity. And then right down there, we've got the liabilities, of course, which have the long-term liabilities and the current liabilities. So these are the things that you basically owe to other people or other business partners. So that's what the balance sheet shows: what you have or what you own and what you owe, right? Things that you need to pay other people. So it basically highlights that part of the business. So these are actually the three statements that you can actually use to project the future of your business. So why are financial projections very important? Now, financial projections are very important for a number of reasons. As I've said, like the first one is to basically guide you into the future, right? Guide your business into the future. You're able to kind of have like a glimpse into the future and what you're going to come across. Now, the second one is to show other people, oh, the same thing, right? The glimpse into your business. Like, for example, investors, right? If investors want to invest in your business, they will need to know if your business will be profitable in the future. So how do they know that? Through projections. So they study those projections and see if this thing will be profitable in the future, which in case, of course, they will need what to give them money in terms of returns, right? And determine if whether it's worth it at the end of the day to invest in your business. And they can also use the projections to basically study the risks that are associated with investing in your business. So those are some of the importances of having financial projections. So apart from that, there isn't much really information that I can actually give you about financial projections, except that they're basically simple. So as much as other people view them to be a little bit complicated and basically difficult to make, yeah, maybe in that regard, if you don't have the accounting background, it might be a challenge. But if you do have an accounting background and you understand how certain statements are basically structured, I don't think that will be a problem. They're basically very, very, very simple things to make. So guys, again, thank you for watching this video, and until then, see you in the next video.